above the market makers overall expected move today, but we did close near the top of it with the decline into the end of the day. I will say that this is around, sorry, this is at like 57.18 right now. The technical level at 56.96 has shown quite a bit of resistance. Over the next couple of days, we may pull back from this level, provided that there isn't more bullish news to help push us higher. This would be a decent level to get a pullback down towards like 5600, where we would reestablish support. I will say that this has not, it's broken to the upside a little bit over the trend, but it's not really holding those breakouts. And we kind of started to see that into the end of the day today, but they got a little bit of a pump to keep it off of the failure. But had we lost 80, this probably would have fallen back towards like that two standard deviation VWAP there at like 56, 60-ish. On ES, same deal, but the 57.26 level here holding up pretty well after the breakout this morning at 56.96. So, looking for a failure at 56.96 and then back at 56.50 would be the next probably fairly important support. Dollar bounced back from its morning decline on the jobs data around 10 o'clock with news that China might be entering negotiations on tariffs with the US. Although none of that is official yet, it's more than enough to drive a market reaction right now, especially with everything being so heavily levered into short vol. Short dated short vol, I should say. Yields at the top end of the curve moving up still pretty aggressively. The 10-year back above 4.3, 20-year 4.8, 30-year 4.7. So we do have yields at the top end of the curve moving up. Those did turn around a little bit with the rise in the dollar, but not much. Commodities, losses in oil again with renewed output from OPEC, but gold and copper managed to move up today a little bit. Correlation kind of back towards bottoming out where we did end of like middle of the day Tuesday, um, but still not really moving much lower. We're now past the tech earnings, and with today's expiration, any in the money calls from tech earnings are probably going to be falling off, and that could create a little bit of a downside, um, a little downside pressure going into Monday, as the MMs shed the rest of those hedges. Um, Forward yield on volatility ended up closing the day just above positive, despite being below positive for almost the entirety of the trading session. Um, and that also came with a little bit of a turnaround at the 10-2 year. Leverage on the carry trade moving up about 10% today. Correlation falling, but bond vol hasn't quite caught up yet. Bond vol falling to 107. And it looks like out of the money put interest once again didn't pick up, but and so we're getting more put selling, but not as much put selling as we had on Tuesday, which is interesting. So a little less aggressive put selling. Correlation continues to decline, and this is the VX's first real drop today below 23 since back on the 3rd of April. So volatility is almost fully turned around from where it closed on April 1st, going into April 2nd. Not fully, but it's starting to. And but VIX is still a little bit in backwardation. That's narrowing. Um, Not much of a push in breadth today. It's a slight drop off actually. With 78.13% of the S&P over its 20-day moving average. I should probably pull up the 50-day. Fed rate cuts. This was a big shift today. Moved down almost a full cut with today's labor data, from pricing in 2 rate cuts for September to now pricing in 1 by the September meeting, which is priced out a full rate cut today, basically. Um, the bear steepener fell, and probably with the drop in expected Fed fund futures. So um, down to 48%, which is our first drop below 50 in a little while, maybe since about April 7th. On the technical side, we've pushed through the gap, so that's closed now. We can get rid of that. The next, we tested 56.96, which is the November 2024 low. And that breakpoint we've kind of been talking about because that was the point of failure on April 2nd as well. So it's a very important level. While we did test it and break a tiny bit above it, we did close below it. And that close below it may mean that we need to pull back and retest it again. And if we're going to get that pullback, possibly next week, maybe back down to like the EMA 30 or the EMA or the MA 50, just a little under 5600. I think both of those would be pretty strong candidates for levels where we could find some stability. The next upside test of some importance is the 200 MA at 5746, and then above that, very near to that, just like $30 higher, is the January low at 5773. I would say that if we can get above gamma neutral and above 5773, we're probably back in a bullish trending market. Right now we're still not. We're right on the cusp of it. This is like almost a full mean reversion, but we're not quite there yet. And if you guys remember back in March, we tested just above the 200 MA at 5773, failed, and that then propagated the downside that we had into the middle of April. So both of these levels, and I know they're very close to each other, but both of them are extremely important. So keep an eye on those. This next week's going to be probably a big deal. But I would say a pullback as far as, even on the technical, if we were to get like an inverse head and shoulders, we would be pulling back to like there, right? So we'll see what happens. But I mean, wait, hold on. That didn't work at all. Where's my goddamn epic pen? Ah, there we go. Yeah. So pull back, bounce. But we'll see how that plays out. Just be careful with the resistances to the upside next week. Be cautious with taking long positions out of the money, because if the breakout fails, you'll get burned. But also don't target puts too far out of the money to the downside either, for the same reason, because they might not print for long, right? You could get support higher, like here at like the 50, right? And then that could lead. So I'd be really cautious around these levels with trying to target too far out of the money with anything, unless you're gonna do like spreads and sit on them for a while and wait for the whole thing to play out. FOMC is next week. Yeah, I know. And we'll probably stagnate into it, into Wednesday. And then when the Fed decision comes through, that'll probably determine direction more than anything else. Anyway, I'll see you guys Sunday. We'll go over the option stuff, and we'll go a little more in depth with the market analysis. But thanks for tuning in, and I'll see you for the Sunday stream. Later, guys.